Morning, guys. Today is Tuesday, April 21st. So let's get started working out our charts. We're on the MNQ. Start with the daily time frame. So we're marking out previous day highs and lows first. So previous day high was already taken out today, so we're just going to mark yesterday's low. Looks like we're still bullish trending. Drop down to the 4-hour. Check to see if we see any internal key levels. This appears like it could be an internal key level. I'm going to mark this one out. I'm going to change it to blue just so I know. Drop down to the 1-hour so we can mark out our previous session highs and lows. So we're currently we have the London. Right now we're still in London. Delete that. We want to do London high because we're currently in that. And we're going to do London low. It looks like that's going to be taken out soon, but we're going to mark it anyway. Asia high was already taken out. Asia low is still in effect, so we'll mark that out. New York high was already taken out. New York low is, where's New York low? Right here, New York low. Mark that out, New York low. It's right next to another key level I previously drew, so I probably will get rid of that one, the blue one. New York low. London low, taken out. London low, New York low, same thing. London high already taken out. Asia high and Asia, the low is still in effect, but the high was already taken out. Okay, so it looks like we're good here. We can remove that line because it was taken out there. We can extend this because it's still valid. It looks like this can be removed because, yeah. What else? It looks like all these other levels have not been touched yet, so they're still all valid. This one can be removed because you see it was touched by this candle here, so that level can be removed. I think that's it. Okay. So we're going to drop down to our 5-minute. Go to 30-minute first, actually. See if we see any internal key levels here, which I don't. I have some key levels already marked out, but I don't see any additional ones. So we're going to drop down to the 5 minutes so we can begin marking out our entries. So I see we have a bearish fair value gap right there, meaning that we can possibly take a long. Again, my new things for longs and my new risk to reward for longs and shorts is going to be 30 take profit, 15 stop loss. I'm going to mark that out here. And then come down and see if we see another one. I don't see any more longs because there's no more bearish fair value gaps, but I have some bullish ones to look to take shorts from. I'm going to mark that one out. If I see any more, probably see one more at the bottom. This is too short, yeah. I think the next closest one would be all the way down here. And I think that's it, probably. I can probably target this key level, so I'll probably target like a 3 for that one. For this one, same thing. I can probably target more because this was inversed already. That little fair value gap you see is gray. That means it was already inversed. I can probably target more there. And for up here, same thing. I can target this key level, right? Okay, so I have my key levels marked out. Okay, we're gonna take it from there. So right now my account balance, oh, I didn't go and I need to enter my password and everything. I'm gonna pause and do that. Okay, so I'm in my tradovate account. My account balance right now is at $50,654.30. So again, my goal is 2,500 for this evaluation phase so that I can get a funded account. Okay, so I'm going to stop the video here. It's 9:27. Market will open in 3 minutes, but again, I'm not going to do anything in 3 minutes because I have to wait for that 5-minute candle to close before I actually look to enter if the candles buy any of these 3 entries I have marked out, or if any new ones end up coming into play. All right. Oh, I forgot to check forex factory. Always got to do that. Okay, so I see some red. Oh, Trump is speaking at 8:30, but I think that can be a little bit concerned. Oh, that happened already. It's almost 9:30. Well, mostly we're looking for is when the FOMC or FMOC, and it's a red folder. That's usually what we look for. So I think we're still okay here. Okay, I'll be back later. Okay, so we have 30 minutes. Approximately 30 seconds until this first 5-minute candle closes. It looks like we may get close to this entry. So let's see how this plays out. Okay, so no, we didn't. So we still have to wait. Okay, it's 9:39. We have 20 seconds left till this candle closes. Seeing if this one will, it was closer to our entry, but now it seems like it's moving away from that. So let's see what happens in the next 10 seconds. Nope. Okay, but as you can see, a new fair value gap formed. So let's see if that can be marked out as a potential entry. Yes, it can be. So we can put that one there also, like that. Okay, so I'm gonna move this one over and this one, because if we hit it, this one, we would hit this one before we hit that one, so. Okay, we still have this one. Okay, so it looks like it's going to inverse that fair value gap, so we can enter. And there you have it. We enter the trade and immediately got stopped out. And I know I shouldn't have, but I entered again. And, I just had so much faith in this trade thinking that it was going to do what I wanted it to. I left my same, 30-point take profit. And, I really thought that it was just going to give me that long that I was hoping for initially. So even though I got stopped out the first time, I did enter back in again, hoping for the best. And you'll soon see what happens with that. But again, I'm in there for contracts and the market just moves so quickly. For the MNQ, especially like the MES, it's not as quick as this. No way. Like the MNQ is so quick when the market moves. So it even looked like I was going to do good at some point. Like you see, it was going up, but then lo and behold, as you'll see pretty soon, everything just reverses and it starts going down, and there I am. And I got stopped out again a second time. So there you have it. So I lost that trade, and for that day I lost $277.20. Okay, so on to the next. Let's see what happens tomorrow.